Is the stock market overvalued? We're going to go to the charts and we're going to go and have a look at what we did last week. We're going to go and have a look at what we're going to do next week. Then we can determine what trades we're going to take on our position trading and 4-hour charts during the week. And for those of you who trade on the 5-minute charts, good luck. Hey, it's Trading with Rob and it's Coffee with Rob. So let's have some coffee. And then we can get on with it. We can go to the charts. We can go and have a quick look at what trades we're going to look at next week, what sort of direction we're going in. For those of you who don't know me, I am Rob. And for those of you who do know me, I'm still Rob. The big thing here is when you're taking trades on a weekly, when you're looking at a weekly chart, what you're doing is you're determining the direction so that you can take your trades on the shorter time frames. It just makes it a little bit easier for you because, as you all know, I always tell you, the market's a 50-50 game and you can't make money with a win rate or with squiggly lines. It's all about the strategies. After the charts, I'm going to take you to the strategy and I'm going to show you the strategy or talk to you about the strategy that we use on a regular basis in the markets, the strategy that'll make you money. Don't forget to drop down to the description and get your free Forex book. Might be something you want. I don't know. Maybe not. Let's go and have a look at the charts, guys. Let's go and see what trades we're looking at next week, what trades we had last week, and where we're going with the account. And then we'll have a look at the strategy that'll actually make you a little bit of money in the market. Let's go and have a look at the trades, guys. Let's go and see what's going down. Don't forget the risk. The risk is important. That never know which way to point. There, that way. There. If most traders lose money, and if you don't like losing money, and if you don't like risk, you probably shouldn't be trading. Really important that you understand that most traders do actually lose money, and it's not as simple as they make it out to be. It can be quite difficult to trade. So as long as you realize that, you're in a good place. So what we're doing is we're looking at the weekly. So let me put this onto the weekly so we can get a, I wonder what did I have it on the weekly on this side? Yes, I did. This one's the weekly, isn't it? That's perfect. That's on a day at the moment, but I'll just put it on a weekly just so that I don't mix up the charts for Monday morning for us. Otherwise we'll all be confused and we won't know what's going on. So let's start with the CHF JPY, Swiss franc JPY, the trade that we took last week. Now on the weekly, look, we are in a profit at the moment, so that's great. So I've left that trade in over the weekend. Now you guys know that I don't like to leave trades in over the weekend, but I looked at the risk and I kind of like, okay, we'll take a chance on it. We'll be okay. It's broken to the upside on the day. It's broken to the upside on the weekly. It's broken to the upside on the 4-hour. This is a great trade. Look at this on the 4-hour. On the 4-hour, straight up. It's gone straight up through. Looks great to me. So I'm looking at, we'll probably get to at least 169. Take profit I've got down here. That's 172. 172's up here. So on the weekly, that would be really easy to reach. So we'll move the stop loss up behind it, put a trailing stop, and we'll let the stop trail up with it. So I'm happy with this trade. This trade is not looking too bad. We'll look at it again on Monday morning and see where we are, because as you know, you wake up on Monday morning, everything's changed. Everything's gone down the loo. Now, US 500, let's see. Are we overvalued? Are we crashing? Is this going down the loo? Is it over? I mean, do we still have some room to maneuver in the markets? It's very difficult on the weekly on the 500 to show you here, but it's broken to the downside, guys. It has broken to the downside. Is it the end of the world? No. But there's 3 nasty big red candles here. What I am looking at in the long term is there will be a supply of money up there waiting to be taken when this comes back and goes back up there and takes it. So it will get back up to 6,100, but I was kind of hoping this is going to go all the way to 66. Now, at the moment, guys, you realize you're dealing with a lot of noise in the market. There's a lot going on with the US politics and things being said and there's a lot of talk going on, and there's peace talks and war talks and all these different things happening in the markets at the moment, which will affect your markets. I would say that they're kind of causing a very unnecessary volatility in the market at the moment, which is giving traders a headache, because you call something, everything's right and on the charts, and then it basically goes pear-shaped, which is why you need to go and watch the strategy after these charts, which is why it's so important that you go and look at the strategy after these charts, because the strategy is the only thing that's going to make you the money in the markets, because squiggly lines can't make you money, because every time somebody stands up and says something, it changes everything, and you get a spike and it goes out and it takes out your stop loss, or it takes out your profit or your trailing stop, whatever the case. And if you don't have a strategy in place, you are going to lose money, especially when the markets are behaving the way they are at the moment. So anyway, US 500, as I say, it has broken to the downside. It is looking bearish. I will stay bearish on it at the moment, with a view to it will bounce up and probably get this money at the 6,000 again. When? I don't know. But what I'm looking for is something at the bottom here, because there's some money lying down here at the 5,500 as well. You can see the big amount of money lying down here. So I would say most likely, in all likelihood, the high probability is that it'll come down to this level here. It's a big level, but it'll come down into this level here, take some money and go back up again. It's very close. It's almost taken it already. So probably next week, it might come into this, take this money, and then we'll start going back up again. So keep an eye out for that. That's looking pretty positive. The euro US dollar has shot to the upside. It's bounced off this level, gone up, heavily bullish, but there is a double top here at the moment. So watch out for the double top, but I'm happy to stay bullish on that with the size of that candle on a weekly chart. That is really strong. Great British Pound, US dollar, pretty much the same. Euro, Great British Pound, I was long on this. We got stopped out on a trailing stop. But I am starting to look at it as there's a good chance of a turnaround here, because if you look at these lines, I'm just going to make it yellow so you can see it a little bit better. Look at that trend resistance line coming through there. It spiked into it and it's coming back. Good chance this is going to go short off of this trend resistance line. So let me just draw another one in here, make it nice and yellow. You can see that dropping through there. So on the weekly, it's kind of hitting its level here. So what you got to watch out for next week, is it going to break through that level of 84? Keep an eye on the 84, or is it going to bounce back down and head on back down to the lower levels? I'm kind of looking at the past, because human beings are creatures of nature. This is not about charts. It's not about candles. It's about human beings. Now, human beings being creatures of nature, they tend to do the same thing over and over again. And in the past, every time it's got to these levels, the human beings have done what? They've sold it off. And it looks like they're going to do it again. There's a good chance that this candle is going to open on Monday morning and give us a bit of a sell. So keep an eye on that. It looks like we might just get a sell on the euro, Great British Pound. The US dollar, Canadian, that has started to, it did bounce up off of the trend support. Look at the trend support. Let me make it yellow again so you guys can see it. It's bouncing off that trend support, bounced up nicely. Huge green candle, really nice. We actually had that trade. It did well. And, well, not brilliant, but it did okay. And now we've got the red candle developing, which is almost undecided. How am I looking at this for next week? I'm still bullish. I'm thinking this could go all the way back up to the top here where it was. But will it do it or won't it? It's always a question mark. It's always a big question mark, because what I am seeing on the US dollar, Canadian dollar, is this level here where there might be some money lying around. It could actually come all the way back down to here as well and take some money. But at the top, there's always the opportunity that it can go straight up and go through. US dollar, Canadian dollar, probably won't trade it next week because there isn't a really good weekly trade on it. I'll look at it on the 4-hour and see if there's anything there. Because if you go back to the 4-hour chart, there does look to be a bit of bullishness in there. So we might look at that on the bullish side. But as far as the weekly goes, might stay away from it. Gold. Gold on the weekly. What do you see on the weekly, guys? What do you see on the weekly for gold? Gold is bullish. It's looking bullish. It's going up. The Fed had its meeting, so that the Fed meeting would have had some effect on the entire story. But we'll have a look on Monday and see what it does and see how it goes. There wasn't a big move in the markets. Let's see. We've got this coming off of the trend resistance, going to the upside, and it looks like it's going to continue on up. Do not trade it short. That supermarket mentality. The gold is bullish, and it remains bullish. Look at that long bullish run, staying above the trend support. It hasn't changed direction. So It's going to continue on to the upside. Brent crude oil, bearish. It's dumped. Look at it. It's gone through the support. And how can you trade short when it's so low? Well, that's supermarket mentality again. It can always go lower. Don't ever think that it's ended going up. Don't ever think that it's ended going down. So it's gone through the support. If it stays below the support, opens below that and starts heading down next week, it could go all the way to 60, guys. So do be careful. Brent is bearish at the moment until such time as it breaks back through that area and points to the upside. What I would do with this on the weekly, take a little trend, draw it through here on the weekly, and then if it breaks above that trend, let me just make it yellow again. If it breaks through that trend and goes to the upside, then you've got some signal that it's going back up, and that's above the 72. So there's a long way to go. It's not getting there quite so easily as we think. The DAX, straight up, going up, no question about it. We're not even going to discuss that. Australian dollar, Aussie dollar, that was very bearish last week, dropped down, broke up, well, not last week, the last few weeks. Then it broke to the upside. You had the long trades. Then we had this 1 week with a big red candle coming back to retest. I think that's a retest. There's a pincer bottom here. I think we might just get some bullish run into the next week, which will be the same for the New Zealand dollar, US dollar, a bullish run into next week. I think it may continue to the upside. It's broken to the upside. This trend here has been broken. Does look like it wants to go up now. Bitcoin, how does Bitcoin look? Bitcoin is kind of weak. Look at the tails, though. All the buyers trying to get back in. Everybody's very confident with Bitcoin, and these tails keep coming up and they keep showing in. Okay, so guys, I'm making this video on the Saturday of the weekend, right? Because Bitcoin is open, so just keep an eye on this. We don't know what it's going to do over the weekend. Crypto stays open over the weekend and it does its thing. So I'm making this video so that you can see what trades are going for next week and what's happening over the week ahead. Now, I would say that Bitcoin at the moment, it's broken its trend support. It's bearish. It's coming down to these 70,000 levels that I predicted earlier. I think it's still going to make it down there and give us a nice buy into the market at a later stage. Euro Canadian dollar, big long move. So our trade that we're holding on to this week is the one that we have, CHF JPY, the Swiss franc. And you know what? I'm going to call this as trade of the week. I'm going to call it trade of the week because I just look at this and I see that we've broken to the upside. And look, these head and shoulder things are a little bit of a concern, but that shoulder was broken. It came down. I think it's going to go up at least to the shoulder here on the weekly and give us a good run. So I'm happy to call the Swiss franc JPY as trade of the week. The only other trade of the week I would give you, US 500 short. Just to say. And then, of course, the Euro, Great British Pound also. I'm looking at a sell on that. Have a look at that next week. See what it brings us. Perhaps it's going to bring us some good tidings. So, yeah, our trade for now will be CHF JPY. I think that's going to be an interesting trade at the end of the day. And looks fair. Look, I mean, if you go back to the day, back to the 4 hour, look at that. Looks amazing. Looks like it's going. So, yeah, definitely we're going with CHF JPY. So have a wonderful weekend while you've had the weekend, some of you, because the members were going to watch this a little bit earlier than the guys in the public. So from the public side, don't forget to come back and watch the live shows. Now, go and watch the strategy, and strategy will help you make the money in the markets and will give you the insight into how you can strategically make trades and not worry about the algorithms, but rather worry about the human beings in the market. Good luck with your trading. So you've seen the charts. Now you know what the charts are telling you. Now you know what direction the shares are going in, what direction the indexes are going in, what direction the Forex is going in, which is the more important one, I suppose. And, of course, what to trade. You see, when you're taking a 4-hour trade in the market, or a 1-hour trade in the market, or even a daily trade in the market, if you know which direction the share is going on the weekly, it sort of gives you a little bit of insight as to what's the better or the stronger side to trade with. A bit of confluence through the time time zones can help your trading quite a lot. But what's the strategy? How are you going to make money in the markets? How are you actually going to be profitable in the markets when you're doing trading? Because investing is different to trading. With investing, you can dollar cost average, you can go mad, you can just invest because you sort of buy something and sit and forget, and you forget about it for 30 years, you come back and it's worth a fortune. That's investing. It's called time in the market, not timing the market. The difference with trading is you're actually trying to time the market. And a lot of people get into trading because it's exciting, it's fun, and it's something to do. And you normally get involved in the lower time frames, and you start on the 5-minute time frames because you've got all these traders like myself going out there and showing you millions of dollars and Lamborghinis and Ferraris, and you think, whoa, that's for me. And you get into the 5-minute charts and you start trading and you lose. And you wonder why. You think, well, I'll try another system. You got another system, you try that because you saw another trader doing that, Lamborghinis, Ferraris, and all that stuff, and you go and you lose again. Then you buy a course, you spend $5,000 on a course. How much does a course cost? I'm not sure. But anyway, you spend $5,000 on a course, and all that money's gone, and you go on the course, and the course, you do so well on the course, you come home, you trade again, and you lose, and you think, what's going on? Well, firstly, guys, on the lower time frames, on the 5-minute, 1-minute time frames, 15 minutes, 99% of traders lose. So don't feel bad. Most people will lose trading on those time frames, no matter how good they are, no matter how pro they are, no matter what course they did or how they learned, or even if they studied at university to be a broker, they're still going to lose on the 5-minute charts. But those guys who position trade and swing trade, that sort of statistic kind of reduces to 60 to 70 to 80% of traders lose, depending on the time of the year, depending on the time and the people and how the markets are doing and all the rest of it. The general average is between 60 and 70% of traders lose on the position trading, 4-hour daily trading. So you've got a bit of a better situation, better odds of actually winning in the market, but the market remains 50-50. The market is a 50-50 game. So how do those 30 or 40% of traders win if the market's 50-50? How do they actually make a profit? Because clearly, if it's 50-50, somewhere down the line, this has got to end on a zero. Well, the strategy is simple, guys, and it's this. And I'm going to show you the strategy, and then we'll talk a little bit further at the end about why the squiggly lines don't make you money. Firstly, the strategy is, if you have an account size, and I'm going to use an account size of $100,000, I don't care if it's a funded account, I don't care if it's a cash account, I don't care what account you got and how much it is. Simply use maths, okay? Now, remember, the markets are very subjective. They're not as objective as you think. So it's not all about maths and fractal, this, that, and the other. But you do need to know maths to work out simple things like how much risk you're going to take and that sort of thing. So if you have a $100,000 account, what I do is I risk 1% on every single trade. This way I'm risking 1% per trade. You say, but I'm only risking 1%. How am I going to make money? Look, guys, if you take 10 trades, you're suddenly risking 10%. If you take 20 trades, you're suddenly risking 20% of your account. Just keep that in mind. But the market being 50-50, you should win 5 and lose 5, so you should be okay. Now, what you do is you've got a $100,000 account, you're risking 1%. That 1% is $1,000. Now you're risking $1,000 and you're going to go into this trade with a $1,000 risk. But how do you do that? Now, the big thing here is to keep the risk the same on every single trade. Every single trade needs to have the same risk. Doesn't matter whether you prefer trading that or prefer trading that and you want to trade more on that. It doesn't work like that, guys, because you're always going to lose the one that you've traded the highest amount on, because that's just, Murphy's Law. If you want to win, what you've got to do is trade with the same risk every single trade with a view to making a decent profit. How do I work out the risk? Well, it's simple, really. You look at a trade, you say, I want to take that trade, and then you go and look at where the trade would be invalid if it was to get to that price. That would be your stop loss. It doesn't matter how far away it is. It doesn't matter how close it is. Just look at a point on that chart and say, if the price gets there, the trade's invalid, it is no more, it's a waste of time for me. That's the point where you want your stop loss. Now you look and you say, okay, I'm going to put my stop loss there. How much is $1,000 back to the cost? In other words, how many lots, how many pips, how many points, whatever you want to call it, depending what you're trading, what kind of situation you're in. Work out the distance between the $1,000 and the cost. That's the size of your trade. Once you've worked out the size of your trade, then you can work out the risk to reward. Then you can say, well, can I make 2 to 1, 1.5 to 1, 3 to 1? Can I make more on this trade than what I'm risking? I'm risking $1,000. I don't want to risk $1,000 to make $300. I'm kind of wasting my time, aren't I? Don't you think it would be better if we made more? Because then you're going to make a profit at the end of the day. Do the maths. because you guys are all into maths, so you might as well do maths. Work it out. If you make twice as much on your wins and you lose half the amount on your losses, then you're kind of going to make a profit. That's what it's all about. You take 10 trades, you win 5, you lose 5. If you win 2 to 1 on the 5 that you win, you're going to make a profit. So now what you do is you say, all right, will that risk to reward work? Because you can't just say, oh, I do 2 to 1, so just like put a price there, so I'm going to win 2 to 1. It doesn't work like that. What you've got to do is you've got to say, will this be able to reach a price where I'm going to make a reasonable profit? And then you can put your target at that level. Once you've got your target at that level and it looks like something you can reach, then you can manage the trade. And managing the trade, go and look at one of my other videos and I'll show you how to manage the trade, because managing the trade is just as important as taking the trade, because managing the trade is all about your psychology. It's all about your fear. It's all about the FOMO, the fear of missing out. I don't like to use abbreviations because they annoy me as much as they annoy everyone else. You know what you do is you go on a course, you go and learn to trade. You know what they teach you? They teach you all the abbreviations. They teach you all the terminology in the stock market, and they don't teach you how to trade. Isn't that insane? What you need to do is you need to learn how to make money. You don't need to learn abbreviations and terminology of stock market. That's not important, guys. Now you know how to trade. Now you know what's going on next week. Come back for the live shows. Don't forget to pop in for the live show on Tuesday, 11 o'clock GMT +2, Thursday, 2:30 GMT +2. I'm doing the 2 live shows a week at the moment so that we can get ahead. We don't have that many people joining us because people don't like hear me telling them that it's difficult to trade in the stock market and you don't make millions that don't fall out the sky. But what I'm doing on the live shows at the moment is I've put together a little demo account for us to have a bit of fun on for the 5-minute charts. And then we've got our live account, our funded account, which you and I trade together. And we're trying to grow that account, that funded account. But the fun account, I'm not putting real money in because that's just for fun, to show you that 5-minute trading is really complicated and quite stressful and difficult to work with. I would do real money, but I know I'm going to lose it, so I don't really want to do it. So, you know, that's kind of like where they go with the 5-minute charts at the moment. But we're having a bit of fun and we're doing it together. So come and join us and come and have the fun with us. Don't forget, go and watch those last videos so that you can work out the strategy to managing your trades, how to manage the trades, not just how to put them in. Thanks for watching, guys. Till the next video. Cheers, ciao, and bye.